this video, we have Michael Campbell with Cross Country Mortgage, and we're gonna be picking his brain about financing options for not only first-time home buyers, but just buyers in general in this current market. So we're just gonna get right into it. And one of the biggest questions, especially as a realtor, is from a buyer is, what do I have to do to get started? And so one of the first things we always say, and it becomes cliche in our market, is you got to get a pre-approval. So just starting with an overview of that process, let's see what Mike has to say about the pre-approval process.
Yeah, so first, I'm very optimistic about 2024, and I think putting yourself in a position to be ready to go and offer on places is very important. As you know, getting a pre-approval is the most important because you cannot put in an offer without it. I believe with the trend we're seeing now with interest rates dropping, you're gonna have to be prepared or else the house will be gone. So making sure you're pre-approved is important. So what that means is we're going to look at our client's credit, we're gonna look at their assets, we're gonna look at their whole employment past over at least the last 2 years. And we're gonna make sure they qualify for different loan programs on both credit score, debt to income ratios. These are terms you hear a lot in our industry, but most importantly that we're fitting the budget. A lot of people I talk to say, you know, I want 300,000. I don't want to go over 300,000, or I don't want to go over 250. That's great, but really it comes down to your overall monthly payment, because property taxes can change, programs with your mortgage insurance can change, your homeowner's insurance can change. So making sure we qualify on a monthly payment is more important than just the purchase price. Perfect example, you may qualify for one home at 300,000, but you may not qualify for another home at 280,000 because the property taxes are higher. So it's important to start with the pre-approval.
A lot of different factors that go into that pre-approval, and very person specific, right? And circumstance specific for those people.
Absolutely.
Yeah. So what does it take to qualify for a mortgage? Like what, if somebody wants to buy a house and you could give them a couple pieces of advice, what does it take to qualify for a mortgage?
So first of all, I want to really dig into the credit report, because I think people that start the process early give me more time to allow for possibilities of increasing your score to give you better terms and qualify for more loan products. So sending me all of your financials, to your history of tax returns and W-2s, pay stubs, bank statements to show you where your money is coming from. If you own a home, I need information on that. But looking at that credit report and making sure the balances are where I need them to be, or taking care of maybe a derogatory item if possible, could really separate yourself when making that offer. Maybe changing from an FHA loan, which is meant for lower credit scores versus higher, to a conventional offer. It can really help separate you from multiple offer situations with other people.
So when you're talking about credit, is there a threshold that people need to be at to qualify for a mortgage?
Yeah, so it's a good question. FHA mortgages, you can basically qualify if you have a 580 or above. There are situations where actually a credit score doesn't even matter. Just how much money do you have down? Does the profile of your credit report fit the needs of our automated underwriting system? But let's start with the basic of 580 is about the lowest credit score you typically see with the minimum down payment factors. And once you get into the 640, 660, we'll be looking at conventional options over FHA options. So yeah, the loan products are big, the credit score is important. And I help you get there for free. If you need a little bit of work and a higher score, and we see some opportunities through our credit simulators, we can get you to another level to improve your terms, possibly get you more home, and give you a better shot at winning an offer with other offers.
Yeah, I think there's a tremendous amount of value there in what you can do to help someone better qualify. So if somebody comes to you and they have a certain amount of credit that could be better, they have a certain amount of debt that could be better, could be lower, and somebody has an idea of what they want to pay per month, you could work with them over the course of X amount of months, depending on how long it might take, to improve those things, to help them and guide them improve those things so that they can get a lower payment, a better rate, et cetera, right?
Yeah, agreed. That's important, because I always thrive on educating our buyers. they're going to have a lot of questions. They don't do this every day, all day like we do. So education is a big part of that. And letting them know that, hey, you may have seen your credit score and other people have denied you. Maybe they weren't helping you get to where you need to be. Like you can improve your score within 30 days or less if it's just about balances and reducing your balances on revolving credit. It could take longer if you have medical collections and stuff like that, but we have ways to possibly get those items deleted. And it could be a longer term, could be 6 months to 12 months. I've helped buyers for 2 years prepare for home ownership. So every person is going to be different, but I love the part where I educate them what we're doing. They get a lot of value out of it, and we put them in that position to make that dream of home ownership come true. So
yeah, no, that's awesome. I mean, a lot of people just don't understand how important it is to talk with the lender. I mean, like it's easy for us as realtors because we're usually the first person that a home buyer will talk to.
Yeah.
And it's literally one of the first discussions we have. It's have you been pre-approved? Have you talked with the lender? The process is so important. So I want to get to a question that a lot of people like to ask.
Sure.
And that is, how can someone get the best interest rate possible?
Okay. And you know, we get this a lot. I mean, a lot of people shop. It's a very competitive industry. So it's, what's your rate? It's a loaded question because it can fluctuate quite a bit. So we need to know all about you. But getting the best rate possible starts with speaking with me first. However long you think you're out, it's, you know, should I start the pre-approval process now? I'm not looking for 9 months. Most people that say that actually end up looking sooner. So if I'm taking a look at your credit report and all your financials, if you're self-employed, there's ways, you know, that we can figure out where that income should be in the future as well. But it's a lot. So speaking to me first is the most important part. Analyzing that credit report, making sure our ratios are where they need to be, qualifying your income based on your salary or hourly. Do you get commission or bonuses? How long have you been at your job? There may be thresholds that change your pre-approval in just 30 to 60 days based on how long you've been on your job. So there's so much that goes into it. It's really analyzing that credit report to get the score as high as it possibly can be will give you the best interest rate. Because when it comes to the best deals possible and qualifying for the most loan products, it starts with your credit score first. How much you put down is a distant second, because you can get into a home for as little as 3% down. And in some instances, for maybe just a couple grand, because we have down payment assistance programs through the state of Illinois. There's some in almost every state, but it's analyzing that credit report, working with me for as long as it takes to give you the best chance and the best probability of qualifying for that home that you want. Just not accepting something that may not fit or check all your boxes.
Yeah, no, that makes sense. And you actually just you helped me transition into my next question. A very important question is always, how do I get the best interest rate? But sometimes another very important question is there any assistance that I can receive as a home buyer, you know, from grants, the state, federally, without going into every single program that's available? What are some common ways that home buyers can get assistance?
Yeah. It's pretty simple, actually. Once you speak to me, it's do you have a qualifying credit
Everything's
score?
simple. Once they speak to you.
Once they speak to me, because I provide that guidance, and it is about education. I want them to feel comfortable and have all the options at their disposal. So for the grants, typically, if you meet the minimum credit score, which is a 640, you know, we like to see a 660. These metrics change a little bit and they make it harder to get. It's not like you're guaranteed at a 640.
Yeah.
But if you get to like 660, it opens up maybe more of a conventional side. But also, it's an income limit case. So if you make, I think it's 125, this number's changing from time to time, but it's under $125,000. If you make under that, you qualify for the grant. However, the state of Illinois looks at these grants a little bit differently when it comes to qualifying income. They're a little more aggressive because they're more of, where's your income going to be at in the future? I'm more, where is it now? So good credit score or decent credit score, and you meet those income limits and you get the grant. So again, speaking with me, making sure your credit is in line is the most important part.
Yeah, no, that's good stuff. And we go into more detail on all these topics. We go into more detail on homebuyer assistance programs at our homebuyer seminars. So whenever our next one is, you know, we do get into more detail on that stuff. But that's great information. Another really important thing that I find, because I get asked this too, just as a real estate agent, and if somebody knows they don't have good credit, and they know they need to improve their credit to get a mortgage. The question is, how do I improve my credit? And so do you have any suggestions as to what kind of the fastest way to start improving your credit is? Do you, in your experience, do you have is there like one or two things that people can start doing right away?
Yeah, I mean, the only thing you can really do, and I'm going to get into a couple important points, is reduce your balances. So the most important part of a good credit score, if you're paying your bills on time, is meeting the ratios of your balances versus your limits. So if you have a $10,000 credit card and you're at 9,800, that's going to hurt your score. If you have a $10,000 credit card and you owe a balance of 900, that's going to be ideal. And the longer you've had these cards in play, the more consistent the credit becomes. But one important thing here when you ask about what can I do, it still talks to me because there's instances where people may think they have to pay off their collections right away to improve their score, and they could actually be hurting it.
Yeah.
And I have to look at the report to tell them through our simulators what they should and should not be doing. Because so many people actually have extended their times to buy a house because they've made moves too quickly without talking to a professional.
And that's another thing that we talk a lot about. We talk about that at our home buyer seminars, but we also talk about it with our clients, especially once we start working with them and after they've gotten a pre-approval, right? It's don't make any big purchases, right? And so what are some common big purchases that kind of might affect someone's ability to buy a house even after getting a pre-approval?
Yeah, we have to be diligent to keep reminding our clients because they don't do this every day. So at the bottom of some of our emails, do not open any new debt. Don't apply for credit unless you let us know. I've seen people want to buy a vehicle in the middle of the process, and we get alerts. If your credit is run for any reason while we're working with you, we get an alert and we have to make that call. So letting us know of purchases you want to make is very important. A lot of people, not a lot, some people may want to push their limits on the ratios to get the house they want. So even applying for a credit card for furniture could mess things up a little bit or delay things or cause big issues to underwriting. So always speak to your loan officer about moves you want to make before you make them.
Yeah, that's great advice right there. I mean, because at the end of the day, when you're buying a house, you have these real estate professionals that create a team for you. And we work together in your best interest to make sure that you get the best rates, you get the best house at the best price, you get the best payment. I mean, and that's what that's what we love to do.
Yeah.
And so it's a good reminder that when you're buying a house, get a good team around you and we'll help guide. It's like football. I always use the football analogy because I often look at a football game and I'm like, why are there 15 coaches? Like, why are there 15 coaches on the sidelines? But it makes sense because we all know what to do a lot of times. It's just you need someone to help guide you and remind you of what to do.
Yeah, I think the top teams know how important having your own team to help your client base and your buyers is important. Now, anyone can use whoever they want, but we've been doing this a long time, and we know certain people that do a really good job, and other people that may have let us down in the past. So we build our business, both you and I and most people in our industry, on referrals. We don't want to disappoint anybody.
Right.
So the people that we refer, we are going to trust. There's no gain through it besides us giving a referral to somebody that we know is going to get the job done and that will treat you with the respect that you deserve.
That's a great point too, because it is one of the driving factors in my business is I don't want to disappoint other people I work with. I don't want to disappoint my clients. I want to succeed, so it's a great point. I have a couple more things to discuss. One of those is, and again, this is something we elaborate on at our home buyer seminars, but what can a home buyer expect to pay in costs? What are just some of the more common, bigger costs, like that they may not know exist, but that, they'll have to incur and plan for? Yeah,
that's a great question because it is, everyone thinks if I buy a $200,000 home or $1 million home, my costs could drastically change. And they really don't change that much. So a good rule of thumb is this: whatever your down payment is, if you're not gonna buy down your interest rate at all, which is a common question, is should I buy my rate down temporarily or in the long term? Let's just say it's a normal market, we're not worried about buying down rates. your closing costs should be between $6,000 and $7,000. Let's say on the low end, maybe you catch a $5,500. On the high end, you might be at $7,500. Title fees are going to be your biggest fee that you're going to see on paper. I've seen them go as low as $2,800 to $4,400. Lender costs are pretty standard throughout the industry. You have your attorney fees, your appraisal fee. There's a couple junk fees we say that are very small. So we break it down for the client on a loan estimate, but I think a rule of thumb is between $6,000 and $7,000, $7,500 maybe at the top end, is a good starting point to add to your down payment funds that you have and realize that's what you're going to come to the table with.
Yeah, no, that's absolutely true. And one thing I'd like to add to that on the real estate agent side of things is that some of those costs can be negotiated on the purchase of the home. So we can negotiate those closing costs that you have to incur and get the seller to pay for some of those for you. So that's something that we talk more about, and that is, a lot of first-time homebuyers, especially, when you're looking at the top of your budget range, getting some of those closing costs paid can be very helpful to save some cash, maybe to do a couple renovations right when you start owning the house. So those are things that we can help with as well. And speaking of getting the seller or negotiating to have the seller help pay for some of those costs, one thing that's been floating around the last couple of years that's kind of gained some traction in the mainstream industry are buy downs.
Yeah.
So I'd love to touch on that. I'd be remiss if we didn't talk about that, at least for just a second.
Yeah, I'll try to make it brief.
Yeah, so just give us a quick overview on what a rate buy down actually is.
So first, there's a long-term buy down, meaning if the rates are at 7% and I want 6.5, I'm going to pay X amount of dollars and my rate will always be 6.5. Right now, I veer away from those because I think the interest rates are going to drop. And a lot of that money could be wasted if you can drop your rate very quickly. What I like is the temporary buy downs right now, is meaning if the rates are at 7 and I want to do what we call a 2-1 buy down, it means I'm dropping my rate by 2% in the first year. I'm dropping my rate by 1% in the second year. And by the start of the third year, I'm at that fully amortized rate. So if the rates are at 7 today, you'd go from 5 in the first year, 6 in the second year, and you'd start at 7. The greatest thing I like about this is that the sellers or builder has to pay for this, not the buyer. So you may have to pay a little bit more for the house for it. It's not like free money. But any funds that are unused when you go to refinance are going to reduce your principal reduction, your principal balance. So that's nothing's wasted.
That's awesome. Yeah.
And it really helps you meet that budget when rates are a little bit higher than you have been used to in the last few years. I mean, on let's say a $350,000 loan, you could be saving up to $500 a month in the first year. And you have that comfortability of getting that home that you really want. So that's why I like the temporary buy down program right now a ton.
Yeah. No, they definitely gain a lot of traction, as you know, with the interest rates being higher in the last few years. So the last thing I want to talk about, because everything that we've talked about to this point, it's pretty much timeless. It's information that can be used almost always. But it's the beginning of 2024 right now. We just came off of a year with some higher interest rates than we had seen the years prior. And we are now starting to see them come down a little bit. So because we know that you can tell the future and that you have a crystal ball somewhere, we don't know where you keep it. But what are your expectations for this year, specifically regarding interest rates?
Yeah, good question. So as much as I like to educate my clients and our buyers, I educate myself on where the market's going to be. Like you said, I know it's a joke, but no, I don't have a crystal ball. I try to do as much research on where the market is right now and where it could go in the future to help my clients. But we were seeing rates in the 8.5 range, I think, on the high side, which you hear a lot of social media or on mainstream media that 20 years ago, this is pretty normal. But we're not used to normal after the pandemic. We were seeing rates in the 2s and the 3s for quite a long time. And even before that, it really never got above 5. So this is just different. And it's a valid question, like when are they gonna start dropping? So now that we're under 7 almost, or right around 7, we do believe that around the end of this year, we're gonna start seeing the rates start with hopefully a 5, if not into the next year. But I think we want things to level out in that range where you're seeing it, the rate start with a 5. We can hope for a 4, but again, it all depends on economic factors that are going to happen, and moving forward, we can't predict that stuff. But the way things are trending right now, I think we're getting we're having an idea of where our inflation needs are and where rates are going to be, and we should see the trend down pretty consistently over the next couple of years, and then it'll kind of level out.
Okay. No, that's good advice. Yeah, I mean, we get questions all the time about what's going to happen in the future.
Yeah.
You know,
Yep.
it's like playing the stock market. You know, it's like
It is.
if you knew it was going to happen, you know, people would be a lot richer than they
Yeah.
are. You know, so but yeah, I think you said something that is just spot on. And you know, any full-time real estate professional that takes their job seriously is going to educate themselves. Every day, you know, we're out there, we're researching, you know, we're reading articles, we're keeping tabs on the broader economic markets, stuff like that. So definitely want a professional that is doing those things.
Yeah.
Yeah, I mean, those are all the questions I had, but did you have anything else to add? I know you had the LLPA topic.
Yeah.
Right?
So when we do videos like this and try to educate everybody, we don't want to overwhelm everybody with all the little stuff in between. So I hope we can have a couple more, you know, sessions to let our buyers know more on each topic we kind of covered.
Yeah.
What I really want to talk about is the locking versus floating right now. People think
Locking what?
Like locking an interest rate.
Okay.
So you'll hear quite a bit, you know, what's my rate, and even during the pre-approval process, does this rate stick with me? The answer is no. So we have to give you a quote and a payment estimate based on where the market is today, but the rates can change. Just like you said, it's a lot like the stock market. If you want to buy a stock today and you wait till tomorrow, the price of that stock's going to change. It's the same thing in the mortgage industry. So when we have that discussion, when you're under contract, you've found a home, and we're talking about locking in your rate, that's when it can stick if we decide to lock. Now, the market's been so volatile lately that it's been really smart to lock in, but things are changing. You may want to float because we're seeing rates trend downward. So the longer period you have between the contract and closing gives us more flexibility of when to lock that rate in. But remember, when you lock it, that's what your rate is. That's what it's not going to change. You protect yourself from them going up, but you have to deal with if they go down, you won't take advantage of that. And when you float it, you have to protect yourself knowing if they go up, you're going to get worse terms. If they come down, you're going to get better terms. So it's just us discussing all your options when you have the contract, and timing is key. And we're going to talk all the way through the transactions to make that decision the best we can.
Yeah, and that's that's something that you're keeping tabs on. You're talking with the buyer, you know, constantly keeping an eye on the market, having a back and forth to help them make the best.
And I'm listening to a lot of people that are smarter than me to give me some advice here, because you have to listen to a lot of different opinions, and if you see that they're all in the same direction, you're going to take that advice pretty easily. It's a lot tougher when you don't see like the trends or the consistency going up or down. It's hard when it's extremely volatile. And good thing for us is that it has evened out, and we have seen the rates trend down. So we're going to keep an even closer eye on it, because we know timing of when to lock these rates is going to be really important.
Yeah, no, that's good. I'm glad you brought that up, because I'm probably going to fire myself for not coming up with that question on my own. So
it's okay. No, you're good. I think this is good for everybody to get a grasp on what it's going to take this year to buy a home, and how we're here to help them and educate them.
Yeah. No, that's good. All right. Well, my name's Andrew Stoll with Stoll Real Estate. Michael Campbell with Cross Country Mortgage is here, giving us all the best advice, the insider opinions, and information on financing a home. We do home buyer seminars periodically, so keep an eye out if you're interested in joining one of our seminars. If you follow us on social, we'll be posting whenever we're going to have one. Aside from that, if you like this video and you found the information valuable, follow us for more. I'm sure we'll have more sessions talking. There's a lot. This is kind of an overview, and every topic could be just an entire video. So, but in any case, thanks for stopping by, and we'll talk with you next time. Thanks.